What's up, traders? So let's do a complete multi-time frame analysis on dollar yen. Let's see what kind of trading opportunity currently we have in this instrument. As you can see on the lower time frame, dollar yen has given us a significant trading opportunity. Now, before we discuss what it is, let's do a complete multi-time frame analysis. Then we'll jump onto this lower time frame to see how we can trade dollar yen. First of all, let's look at bigger picture monthly perspective to see the general direction in the market. Now we see that on the monthly time frame, dollar yen is long-term bearish. Starting from here, we have seen a very strong bearish engulfer, followed by another bearish candle, back to back 2 monthly strong red candle, giving us a potential for strong drop on dollar yen. If you look at the monthly support, this is the nearest level of monthly support we can see, and if you extend that level with this monthly 20 MA, what we can expect now dollar yen to come back to this level or even breaking this level to the downside. As on the monthly perspective, we see the dollar yen is overextended to the upside. We can expect this price to come down a lot, as this is an overextended market, and we can expect significant retracement to test this previous, at least previous resistance here nearest, which is turning support here on the monthly time frame. If we look at weekly perspective, we see dollar yen price action market structure is highly bearish. Starting from here, there is an impulse followed by this correction. Now with that correction, we see narrow doji has been formed, and then there has been another impulse correction. So it is a typical downtrending market structure, creating series of lower high and lower low, which is highly bearish. Now if we narrow down to the recent time frame, we see previous 2 weeks highly bearish. There is a long week candle. This is a middleman tested the previous support here, which is turning resistance, and then created this middleman, followed by another bearish candle. Now this week we see this is the weekly. If we look at the lower time frame, we see there is a trend line here, and the price has completely disconnected from that structure and has broken down. So what we can expect now, after a little retracement to the upside, the price to continue to drop on the lower time frame, as this is a typical downtrending market structure. What is falling is likely to fall. That's the law of trading. If we look at the daily perspective on dollar yen, what do you see that on the daily time frame there is a narrow doji has been formed. This is the previous day's candle. As you can see, previous day there is a very narrow doji with a wickless candle here. Now this daily candle today, we say the price has broken out of this structure, grabbed liquidity, and then closed back below as a doji. Now this is a very important candle on the daily. What we can expect now today, the price to give us a significant retracement and then to continue to drop, as this daily candle has a liquidity in it. It can give us a huge movement to the downside. So monthly, weekly, and daily giving us a high probability for drop. Now if we look at lower time frame on the intraday, we see that there is in fact a middleman here. That middleman crossed all these narrow candles high, grabbed liquidity, and then closed back below as a middleman. Now the price is going up. What we can expect now, this price to come back here to test some part of this long wick of this middleman, and then to give us potential bearish opportunities. As soon as we'll find dollar yen along this zone rejecting on the lower time frame, we'll consider going short with a high probability trade setup with our students. If you find value in this analysis, then smash the like button, and also let us know in the comment section which way you are trading dollar yen. Thank you. I'll see you soon in my next analysis.